Travis, it's year-end review time, which I know that you love. So today let's discuss the stock market's journey in 2024 and the Federal Reserve's pivotal role in the year.
Yeah.
It's been quite a ride, back-to-back 20+% rates of returns for the S&P 500. Say that again, 20+%. That's pretty impressive. But the real story, which we've talked a lot about this year in our videos, is the anticipation surrounding the Fed's actions on interest rates, which...
Yeah, the Fed's been the primary driver of news
That was the
and
story
market
this
action,
year.
and early in the year we had some predictions where the market thought that we were going to get up to 7 rate cuts this year. Well, like most predictions about interest rates and markets, when you're talking over the short term, like a 1-year period, they proved absolutely worthless. We saw progress on inflation, however, it proved more persistent than expected. That last mile is usually pretty tough on inflation. But, that kept the Fed cautious over most of the year. And it wasn't until, the final months that we saw any movement on interest rates from the Fed.
Yeah, how do you feel about predictions? I'm just curious.
Most, over the short term, most are worthless.
So the question we keep asking was, what finally convinced the Fed to lower rates? It was a combination of factors, really. We saw softening economic data in the late spring and summer months there, which suggested to the Fed that the risk between inflation and unemployment was somewhat balancing itself out.
Right.
Interestingly, in 2024, the presidential election likely, though, did play a role, don't you think?
Yep.
It had to have. And so despite relatively strong economic performance, half of Americans, though, felt we were in a recession.
Well,
which
it was a have and have not
was.
story, right? When you have the upper income earners, they don't feel it as much when inflation's taken a bite. In lower income segment there, they spend more of their monthly check on what? Groceries,
Food,
gas, and so I took a bigger bite, which you can see why they might feel that way, right?
Absolutely.
Yeah, and that's a fascinating disconnect when you think about it. So the Fed, not wanting to be behind the curve on a potential recession, which, I wouldn't either. But
No.
They generally are in these situations. They signaled in August, I believe, the time had come. They used the time has come, to lower rates. And they followed that signal with a strong move in September. They cut the Fed funds rate not by 25 basis points or 0.25%, by a 50 basis point cut.
Really
so they came in pretty strong, and that's quite a shift. And that Fed's move helped boost economic confidence. U.S. markets kept marching, and if you're talking about the S&P 500, it was primarily fueled by that what we talked about, the Magnificent Seven stocks that are just riding that AI, artificial intelligence wave higher. So that was another theme pulling through the markets.
Seemed like a rocket ship for with AI. And positive sentiment was also further amplified by the end of the election, right? And which removed a key source of uncertainty for the markets. And as we know, markets don't like uncertainty at all.
Especially election hanging over.
It is the worst. It doesn't matter really if it's a Republican or Democrat. What the markets just want to know is who's in office, so they know which direction policy is going to take them.
Yeah, and a lot of people don't like that answer, but when you look at the data, they just want to know who.
Right. Everybody was like, "That's Republicans. Oh, it's the Republican end. We're good. Democrats. Oh, we're good." Right. Well, if you look at the numbers, it doesn't add up that way.
Just tell us who it is.
Correct.
Just tell us who it is. So, and this particular election, was well received by business leaders, who viewed Republican administration as being more pro-business versus regulation, right? So we ended the year on a high note, and confidence surged as the year ended, what some might call animal spirits awakening. You hear that term.
We're going to go here.
Yeah.
Huh? That's great.
However, it's worth noting that while the Fed ended up cutting rates by a full 100 basis points or 1% over the year, was that the 7 that was predicted earlier in the year?
Yes, 7.
I
think you said 7.
It wasn't the 7 cuts that were predicted at the beginning of the year, and so I'll repeat it. Predictions about market action over the short term are generally worthless. I'm saying that because we're going to see a bunch of them in January.
How do you feel about it again?
Generally worthless.
Okay, got
so.
it. Well, at least the last Fed meeting of 2024, Jerome Powell seemed determined to temper expectations heading into 2025.
Yeah.
It's forecasting only a couple cuts for next year, which upset the market just a little bit.
Yeah.
This will undoubtedly fuel more predictions that I know that. Remember, I think you said you're excited about predictions that are gonna work.
I mean,
and be accurate.
News people have to talk about something when you're on 24 hours a day, right? So generally, it's unproductive banter to grab
really,
your eyeballs, right?
That's all it is.
Yeah. So, Powell came out and said that he's been signaling to the markets, quite vividly over this last year, and he wants to keep a lid on excessive optimism at this point. But summing this all up, Steve, 2024 was a year that reminded us of the complex interplay between economic data, market sentiment, and policy decisions. And we have these every year. It just depends on which one comes to the forefront and kind of drives markets moving forward. Looking at 2025, it's clear that while the economy has shown resilience, the Fed remains cautious. Investors should stay informed and prepared by working with their advisor. Put a plan in place that will help you weather multiple economic environments. Because if you have that, then you don't have to worry about these predictions.
That's right.
That are coming out every year. And you have the confidence to weather the storms. Because I'm going to say it again, because you've asked me to say it a few times. Short-term market predictions will continue to be worthless.
Is that right?
So get a plan in place so you don't have to worry about it.
You're right, because if you do have that plan, Travis, the year-to-year markets just don't matter.
They just don't.
It's really what happens over a 20 or 30 year
Which become much more predictable.
Correct.
Yes.
Yes. So Travis has been great. I look forward to it, I guess, next year. Huh?
Next year. We'll see you next year, Steve.
Sounds good.